Thanks for joining us. I'm Marlon Bowling with you as we watch your grain market activity on a Wednesday. As we look at the corn market in Chicago right now with current quotes, here's a closer look. We have September still a penny and a quarter higher at 347.5. It hasn't done anything wild today, but it is firmer. December corn now a penny and a half higher at 361.25. Let's take a look here at our soybean trade right now. And on the soybean market, we now have August a penny and a half higher at 8.41 per bushel, and we have November 1 3/4 higher at 8.57. So they are basically standing right in the middle of their trading range today. Let's move on to the wheat trade. And in Chicago wheat, we have been fluctuating around on both sides of unchanged today. We got as high as 5.05 on September overnight and as low this morning as 4.94 3/4. Right now we're at 4.98, so it's back below that $5 benchmark. We're unchanged. On the Kansas City market right now, you have September trading a half higher at 4.91 1/4. And in Minneapolis wheat, that September contract there, let's take a look at what it is doing. If we can roll it over. There we go. September down 3/4 at 5.32.5 right now, so just 2 ticks from our low of the day. Cotton market, by the way, on the December contract is up 19 points at 88.53. Scott Gecas joins us now from the edge of the trading floor in Chicago, and he is with Longleaf Trading. How you doing, Scott? Good to have you with us here today. So tell me about the market action here in the grain trade. Things seem to have quieted down considerably here today on a Wednesday.
Yeah, I mean, it's pretty quiet coming across the board. In the soybean market, the trade war talks, the tariff talks, that's been a headline for quite some time. It looks like the traders are pricing that in versus Brazil versus U.S. So Brazil's trading about 270 over, U.S. is trading about 60 cents over, which reflects that 25% tariffs. So there was a cargo that shipped from or out to China last week. So we're still keeping an eye on all the tariff talk. You know, if the tariffs stay in place, we're looking at world-ending stocks being at record highs. You know, if that does happen, we're also looking here at the U.S. as record yields. You know, right now we're targeting that 53 bushels per acre, and that's in sight. We're going to see how that actually is going to play out, though.
So what are you projecting then for the rest of the growing season here for the soybeans, as far as maybe a tendency for potential up or down now?
Yeah, well, I mean, it's all going to depend on the weather. If the weather stays as is, I think you're going to see those record high yields. If we get any kind of a little bit bearish weather coming into play, you know, that's going to affect things, how it's going forward. But, you know, the weather is the weather. We're just going to have to wait and see how that plays out.
Okay, well, Scott, we'll bring you back here in just a little bit. I want to get your thoughts on what's taking place in our livestock trade. Of course, we have a big report, or a couple of big reports coming up day after tomorrow, and we'll focus on that too. We're talking with Scott Gecas, and we will be back in just a moment. Don't go anywhere. We'll be back with Scott. So glad you could join us today. I'm Marlon Bowling with you as we watch your ag commodity trade. Well, we talked about the grain segment here a little bit ago, and now we want to focus on our livestock trade. And there's a lot going on this week that is livestock related. Scott Gecas rejoins us now. He is at the edge of the trading floor in Chicago. And Scott, once we talk about the cattle market right now, things were very timid again on the open. They just didn't do a whole lot of anything. Starting to firm up all of a sudden, and this is very intriguing here because we have some major reports coming up on Friday. Cattle on feed report, that's a monthly report. Then we have the semi-annual cattle inventory report that'll be coming out, and yet all of a sudden things started to firm up. Let's take a look at our live cattle board right now. When we opened up the day, things were only moving maybe about a dime or so one way or the other. All of a sudden you have your August live cattle up $2.26 at 108.68 per hundredweight, almost on the high of the day, only one tick from it. October up $1.85 at 110.35. That's only one tick from the high of the day. All the contracts are over $1 higher now. And on the feeder cattle side, we currently have the August contract up $2.40 at 153.68. That's on the high of the day, and now we're about $2.50 off our earlier low this morning. September up 228 at 153.98. That's only 2 ticks from its high of the day. What happened to the cattle market here in the last few moments? Have you heard?
Yeah, I think the cattle market move right now is just purely based on the technical chart. You know, for the last few weeks, we've been always talking about that 108 level. As you just seen, as I was here, we popped above that 108 level, and we had a little bit of a volume push. So if we can have any sustainability above this 108, we expect it to run at least to 110, if not a little bit more. One thing in the cattle market that I want to point out is production usually declines in the fourth quarter. This year, we've seen a 4% jump. So it's going to be very interesting to see what those numbers come out in those reports later this week.
Okay, that's very true. Now, I want to look at the lean hog trade as well. With the big bounce that we're seeing here in the cattle market, the hogs had been weaker earlier today. Right now, they are still under a little bit of pressure, not a lot, but it is lower. August lean hogs down 12 at 67.78 per hundredweight now. And you have October down 62 at 51.58, December down 58 cents, and it's below $47 now at 46.85. That's on the low of the day. And we made new contract lows yesterday. It appears that they're carving out more new contract lows here again today.
Yeah, in the hog market in particular, the August is trading about $12.29 discount to cash. 5-year average is only $5. The August chart, it's absolutely broken. The one thing that sparked my interest in the first 3 minutes of trade today, the open interest in the October puts tripled. So what that tells me is that there's no end in sight anytime soon. The trend is going to remain lower unless if we get some positive news out with the China and the trade tariffs.
Does this mean that they may be still harvesting a few stops under the market yet at this point or not?
I don't think the stops have been triggered. I think the stops have been triggered maybe on last Thursday or last Friday. I don't think there's any stops being set in place right now. That, like I said, the chart just absolutely looks terrible. It's on a technical breakdown, it's broken. So we're going to see where it's going to be.
Well, I appreciate all the comments on that, and we look forward to the big reports coming up on Friday. I'm sure we'll be talking with you again here real soon. So I appreciate the help, Scott. I hope you have a great trading day.
You too. Thank you very much.
All right. It's Scott Gecas of Long Leaf Trading. He is there at the edge of the trading floor in Chicago. Fascinating where he just came on the set during the commercial break and said, well, if they break through 108 on cattle, and they did as we were talking. So
that's right.
It hit his target. Live TV for you folks.
All right.